So relentless growing demand, challenges of supply, rising prices, where do I invest? We have two great zinc investment opportunities for you. First of all, we'll travel to Greenland to hear from Ironbark Zinc and their world-class Citronen zinc project. Probably colder than the beer fridge at Dan Murphy's, so there must be something good going on there. Would you please join me in welcoming Managing Director of Ironbark Zinc, Jonathan Downs. Jonathan.
Thank you. Thank you all very much for attending, and Andrew, that was a great entree to where I'm heading now. Okay, so we've been working on the Greenlandic project called Citronen for nearly 10 years now. It's been the sole focus of the company for a very long time. And over the course of that time, we've actually expended $50 million on completing the feasibility study, the drill out, and all the permitting to get the project up and running. So we're hopeful that we're going to be one of the companies that makes this the next cut of production, and we're very comfortable that we're well placed to do it. Just following on by the detail that went into describing the future grade and tonnage curves for zinc mines, Citronen is actually very well placed. We have a 30 million tonne grade at nearly 8%, so good high grade, good tonnage, and more importantly, the open-ended nature of the ore body. We've really only just scratched the surface of this area. In fact, we have a target resource of 300 million tonnes, so effectively a century's worth of production as a major mining producer. I won't belabour this, but we've also recently discovered germanium as a product in our ore, and we're investigating that with some engineers to work out how extractable it is, what kind of a credit it could be. Germanium's a rare earth used in semiconductors, solar panels, optic fibre. It's worth nearly $2 million a tonne, and we could conceivably have a significant resource of it that will be mined and will be processed. So extract it could be a useful credit, but it doesn't factor into any of the work that we've done at this stage. So the fundamentals for zinc are very strong going forward. We're delighted with where the market's at. It's a fantastically fertile position for us to be moving into the financing and construction stage. Just a quick snapshot of the company. We have a fairly modest market capitalisation of just over $30 million. I'm not wrapped with that position, given we've spent $50 million on the project to date. We have no debt, $6 million cash in the bank. We have, I believe, a very strong board. Peter Bonetto is a banker background based in Sydney here. Myself, I'm a geologist. Kelly Strong is a mining engineer. He works for Nurstar, and Nurstar is our largest shareholder and represents the world's largest zinc smelting group. They have operations around the world, and they're very key to our support level. Gary Combe is a mining engineer with a very strong mining background and a very strong track record. He, in fact, the last time he had a managing director role, he was a managing director of Jabiru, which commissioned during the GFC, was profitable every year, and then was taken over for around $400 million by Independence Group. And I should just say, because Gary's not here, that that's 1/11 of the size of Citronen planned production. So our project is a very, very big project. And then we have David Kelly on the board as well. David Kelly represents Glencore's interest. Glencore is the world's largest zinc mining group and also the world's largest zinc marketing group. So quite an interesting register for the company, and I believe a good sign of the support for the project. On the resource, we've drilled 65 kilometres of diamond drilling. We own 4 diamond drill rigs. We have drilled this very hard, very solidly. We've managed to expand the resource, but interestingly, the resource remains open-ended in every direction. So we're very confident that this resource is going to grow a lot more, but unfortunately, there comes a time when you have to stop drilling and start looking at development. And we have a 16-year identified mine life, or 14 years in the model, with another couple of years in inferred resources. Operating in Greenland is actually a very stable jurisdiction. We operate under European law. They've built a mining school. They have a strong mines department. They are extremely keen to see a big mine get up and running in Greenland, and only about 6 months ago I was on site with the mines minister, and they are as supportive a group as you could possibly hope, and it's a great jurisdiction to operate under. I've mentioned our partners. We're now in a employment drive as we're in the final throes of the construction, as I mentioned. We've recently appointed Michael Bourguignon, who last built the Syrah operation, the world's largest graphite mine. He managed 2,000 people, with 96 people reporting directly to him. So he's a superb appointment, and we're building the team again now to take this project forward. Very similar scale. Henrik Lausen, logistics, fantastic. He's putting together the ship this year. We're taking the ship to site, putting $1 million worth of fuel on board so that we can start a very hard construction ramp up next year. We're also taking mining equipment. We'll start the box cut and decline into the first ore body this year. So we're actually constructing. We're breaking ground and taking the project forward as hard as we can. John Fitzgerald, well-recognised financier, working with the company in the company's office. And then we have Cutfield Freeman, who's an international mining facilitator or financing facilitating group. And they normally work with the likes of BHP and Glencore on large-scale financing projects, and they're assisting us with building the package to take the project forward. Contrary to Andrew, I'm going to tell you that the world is running out of zinc. But and you can see here, we've seen a lot of major mines shutting down, and this is through mine depletion. These resources aren't coming back, so I'm pleased to say that the world is facing a zinc shortage, which is resulting in quite a strong zinc price. In addition to that, there is a fundamental change in the zinc market. Firstly, the Chinese tend to produce half the world's zinc and consume half the world's zinc. And traditionally, every time there's a price rise in zinc, there's been a supply response out of China. This time around, with quite a strong zinc price, we're not seeing that supply response. And the reason for that is comes down to environmental standards having been increased very strongly within China, and that's putting a lot of pressure on what would otherwise be swing producers who didn't really necessarily have proper tailings dams, and lead waste was being dumped into creeks, etc. So we're seeing very tight environmental controls out of China. I don't see those being reduced, and so for the first time ever, we're seeing potentially a slightly stronger for longer and some sort of platform underneath the zinc price going forward. So as a value proposition, Ironbark, I think, compares pretty well. As I said, we're at a very advanced stage. We have the largest zinc resource on the ASX, and in fact, I believe for a junior or mid-cap even on the TSX. What we don't have is a big market cap at this stage, and that is for a variety of reasons, but we need to achieve our construction ramp-up plans, and we need to get our financing in order, and I believe that the balance will be restored there. As an ore body, this is actually quite enticing. It's very shallow, and you can see on the right-hand side there, it actually starts at about 40 metres deep. This section here runs for 3 kilometres north-south. It's 400 metres wide. We have a minimum mining height of 4 metres, but it averages about 10 metres. And you can see here some very strong grades and superb continuity. And we're going to mine this through room and pillar mining. So we work up 14 working faces, and we progress through the ore body. No development outside the ore body. We stay inside the ore body for the life of mine. On a plan view, is that a laser beam? Yeah. That section cuts through there. That's the first 8.5 years of production, but it actually runs for 3 kilometres. It's 400 metres across. It is a very significant ore body, and then we'll be migrating across to the Esrim zone. Again, it keeps running under here. We're getting really good high grades on this front here, but unfortunately there's a kilometre high mountain on the top of it, so it started to get very expensive drilling. Just while we're here, that's deep water, so we'll put a processing plant just here, just next to the ore body. So actually very well situated, adjacent to deep water. So the economics, well, they are incredibly strong. And you can see here we have a good low operating cost, there's a good margin, and a really pretty impressive net present value. We're working on a reduction in some costs, especially the shipping costs, and we suspect those numbers will come down over time. The CapEx number is quite strong. Unfortunately, when we did the study, we actually included owning the entire mining fleet and the power generators, and those are things that typically a company does not start off owning. So we're looking to lease hire those, and we expect some strong reductions in our capital cost as we start engaging and getting into some long-term financing contracts on the operation. And you can see here the ramp up. There's a great margin there. So this is going to be a very significant mine. Just to put it in context, this mine will be producing 200,000 tonnes of zinc per annum in the early years. That is, we can see in Australian dollars how much money that's making per annum. That's a very large scale operation. The average zinc mine is probably about 21,000 tonnes. So this is a large scale operation. So since we floated, this is just a quick checklist of everything we've tried to achieve over time, and I'm pleased to say we've actually managed to tick all our boxes. Some of them took a while. It took a while to get the mining permit in place. It's a 30-year mining permit. It is inclusive of all our environmental permits. I've had to deal with the NGOs, and it's inclusive of all the social impact assessments. So we do have some training, education obligations within Greenland. And now we're right at the very, very final stage with the site works commencing, the senior appointments, which we've started, and getting this thing into production. So this is a quick summary, again, of the economics, the mining licence, and I didn't really touch on the engineering work. So all the engineering works and the feasibility study work has been done by Tier 1 independent contractors such as Metso for the plant and equipment. We make a high value concentrate with no penalty elements. Its recoveries are north of 87%, so very high recovery, high grade concentrate, saleable around the world. We put it on a ship and we ship it out. And as I said, using Metso, we get a process guarantee. So it's off the shelf technology, nothing novel or complex about it. This is just a quick photo of the site. This is our freshwater source for the plant. We'll put a bit of a lift on that. It's actually got fish living in it. We've got the camp next to it. You can see the core farm as well. So again, an environment ready to mine. This is just a quick fly through. Still have a couple of minutes, so I should just squeeze it in. This is real photography draped over real topography. And you can see here the deep water, that's the process plant right on the water. That'll actually go in on permanent barges. So we'll dig a shallow embayment in the gravels around it. It's all gravel till, and we just hook it up on those barges. This is the open pit portion of the mine. We have 10 million tonnes at 2-to-1 strip ratio. There's a 2-kilometre wall of massive sulphides sticking out of the ground. That's how the project was discovered, and this pit is imaginatively called the Discovery Zone. So looking back across the water now, that's flying over the freshwater lake there, and that big mountain, the ore body just keeps going under that, and these SEDEX systems can run for many kilometres. We've identified mineralisation over 11 kilometres, and as I said, it's completely open-ended. There's the airstrip here, and the decline into the mine. So room and pillar mining is it can only be conducted on flat-lying ore bodies and allows you to just progress through the ore body, but you leave a percentage of the ore body behind as pillars and you just simply mine around them. So we'll pull back and you'll see the drilling should appear any second now, and the ore bodies. So this is that section I showed you earlier, right through the middle there, the first part that we do target. It is shallow, it's very high grade, and you can see that it's really been very solidly drilled. It's all measured category inside that zone. So there's no risk, I guess, of conversion. We find that we hit the ore body within centimetres of where we expect to when we do infill drilling. It's a very regular sedimentary deposit. It is analogous really to a coal seam. And so what we do is we run a traditional process plant here. That's the accommodation village up there. The big white thing is our concentrate storage dome. So we make our concentrates and we place that in the concentrate storage. And then you'll see the big ship loader. Okay, so this is the process plant. It's built on 3 modular barges. And it's a standard conventional flotation process. We have a conveyor system from the concentrate storage dome across to the ship loading facility. The whole operation's run on diesel-fired power station. Again, the key is the mining, the geology of the project. It's very simple, and we consider low risk. There's the marshalling yard there. That's the fuel farm loading onto the ship. And it's just a good overall conceptual view of how we see the mine operating, and off it goes to market. So thank you very much. I think that's pretty much me done.